Now, last year, the FASB announced a one-year deferral for the implementation of FIN 48 for private companies. Is that the start of a trend? Are we, in fact, moving toward a system of big gap and little gap?
I think the answer is no in the context of big gap, little gap. I think FIN 48 has admirable qualities to it. I think it's an attempt to really help protect to some degree the public interest in a way that that hasn't been attempted before. I think the FASB 5 contingency standard is poorly written. The probable possible remote criteria leaves a lot of room for gray. I think FIN 48 tried to clarify that and tried to make it a bit more narrow in terms of exactly what the answer should be. I think what's happened is folks simply aren't used to it. They're not used to the kind of disclosure that FIN 48 requires. They're uncomfortable with that disclosure. It would have been maybe more effective if they had first rewritten FASB 5, then did FIN 48, but that's not the choice they took, so that didn't happen. And now we have FIN 48 out there, and of course folks are complaining about it. Some of the complaints are legitimate. There is a time period and a cost involved in doing a FIN 48 review. And it's complicated, particularly if you're in multiple jurisdictions, it's complicated. So the result is that folks asked for a deferral. FASB listened to the request, and to their credit, they deferred it a year. Are they going to defer it anymore? No, I don't think so. I think they're done with the deferral of this. They did it once, and I think it'll just now be applied. In terms of big gap, little gap, there's different ways of defining what you mean by little gap. Some folks mean it's taking gap as we know it and eliminating things, reducing disclosure, measuring a little bit differently certain items. That's one approach. A second approach is going to the international standards, which is the small and medium-sized entity approach, which probably isn't going to fit as nicely in the U.S. as it might elsewhere. It doesn't apply to not-for-profits. It doesn't incorporate anything for employee benefit plans. There's a number of other issues that are difficult to have an easy transfer of information. The third way of defining little gap is going to an Akbawa presentation, generally speaking, income tax basis. And our experience suggests that many companies are moving to income tax bases now in anticipating international accounting standards being required in the future. Probably the arbiter of all this at the end of the day will be the banking system. Will they, in debt agreements, require something called international GAAP? Will they require something called tax basis accrual? Will they require something else? And we're not going to know that for a few years. But it may be that the banking community actually dictates what becomes little gap more than the standard setters do.